Joining me now is Young Yu Ma, Chief Investment Officer at BMO Wealth Management. Young Yu, great to have you on the show and welcome.
Thanks, Kristen. Great to be here.
What do you make of this market as the S&P is within striking distance of an all-time high?
Yeah, the market definitely has a good dose of optimism and is looking forward to a growth trajectory and the earnings season, which I think there's still a lot of optimism that can come in strongly this year and really underpin what is strong fundamentals in the economy and healthy productivity numbers to really have a favorable year this year.
What are the fundamentals that you see that show this market is in a good place?
Yeah, the fundamentals are important because when we take a step back and think about how much strength that underlies the economy and underlies the market, really we want to look at things like consumer spending, corporate spending, the leverage, or in this case, lack of leverage that both consumers and corporations have. We think those are very healthy fundamentals. And yes, there could be volatility along the way, but when we see that buffer, that gives us confidence that we'll be able to ride out the volatility and the economy can remain stable along with the markets.
Tariffs, of course, something in focus, whether or not they come to fruition. We have heard from market participants that they do see it as a negotiating tactic for President Trump. How do you view tariffs and their potential impact on stocks?
We do think tariffs are a wild card this year. Yes, we primarily believe they'll be used as a negotiating tool, but we also think President Trump is willing as a second choice to enact tariffs as part of a broad-based policy and as a tool to bring jobs back. And sometimes you'll reach negotiated deals, but sometimes deals might be harder to reach and it could be a bumpy path. So we think that trajectory might not be a straight line with tariffs. We do think it's more negotiation than punitive tariffs, but we could get a little bit of both.
Of course, there has been a focus on yields of late and rates, what it means for stocks and other areas of the market. Not necessarily something front and center the past few days, but what do our viewers need to know about yields as it pertains to performance?
Yeah, that's the good news, that over the past week or so, yields have cooled off, long-term treasury yields, because we did get that good inflation data last week. But where does pain start to set in the markets? Where does there start to be concern? That's probably the 10-year treasury yield breaching 5% in a very meaningful way. We think actually the economy and the markets can digest higher yields than we have today, but if they were to run up significantly, that would inject a bit of caution in the markets for sure.
Volatility, is that your expectation for the year?
Yeah, we probably are looking at a lot more volatility this year than we had in the past year. But we're looking for opportunities amid that volatility. We're not running away from volatility, looking to bail out or pull the trigger at a moment's notice. Really looking to see, given that we have those strong underlying fundamentals, and this is where we come back to fundamentals is really an important consideration, the market and the economy can probably withstand a lot of turbulence this year. So we believe that amid this volatility, there'll be opportunities that arise, and investors should be patient this year for those opportunities.
And what do you see as an opportunity? What is a moment in time where someone should consider putting some money to work?
Well, for people with cash on the sidelines, we actually recommend more of a dollar cost averaging type of approach this year because we do expect some volatility. But even amid that type of approach, there's a way you can accelerate some of that dollar cost averaging if you see a pullback in the market. Say if you get a 5 to 10% pullback, maybe accelerate the positions that someone takes in the market. So what exactly is going to lead to those opportunities could be tariffs, could be something else, but we do think there'll be opportunities this year.
And in terms of what the opportunities might be, we see the World Economic Forum underway in Davos, Switzerland. Certainly artificial intelligence, technology continuing to take center stage. How do you view that sector?
Well, we really like the tech sector. We think it's going to continue to be a very strong driver, that productivity trends that come out of AI are going to really be healthy for the economy and help companies maintain high profits. And this is really just the beginning. We still think we're in the very, very early stages of AI development. We think there's a long way to go, a long build out of the energy infrastructure as well that's going to be needed to fund that or power that. So we think these trends are here to stay, they're long lasting, and a lot of money is going to go into them.
And in terms of the Federal Reserve, we're going to hear from the Fed next week, believe it or not, in another decision. Markets by and large not anticipating any movement on rates, but of course they'll be listening closely to what the Fed chair might have to say. What do you think the market needs to hear from the Fed chair next week?
I think the market would really gravitate toward and take favorably if the Fed gives commentary about what it sees as the trajectory. For example, if we get another few months of favorable inflation data with the labor market staying around where it is, could then the Fed be back on track for more cuts, say in the late spring? I think everyone knows we're not getting cuts right away, but the market would really like to see that this year has a trajectory for more cuts. So indications in that regard, I think, would be taken well.
And in terms of what else is on your radar, what our viewers need to know, Young Yu, what would you tell them?
Well, let's see how earnings season plays out. What the companies give as anecdotes in terms of how they're implementing AI, the benefits they're seeing from that. We think we're in the early stages, so we're not going to get hard data at this point.
Yeah.
But those early anecdotes in terms of companies seeing cost savings, implementing AI technology are going to be important to keep those underlying drivers of the market and that underlying confidence sustained.
IPOs, anticipating an opening up of the IPO market this year. We saw Flowco, an energy equipment provider, tap the capital markets last week here at the stock exchange, was warmly received by investors on that first day of trade and in pricing the night before. Expectations that Venture Global, an LNG company, will debut tomorrow. What does this signal about the market?
Well, we do think this is a positive environment for IPOs. Now, whether or not we're going to have a gangbuster year for IPOs, that's probably a bit of an overstatement, overly high expectation. But we do think it'll be favorable as long as the markets remain strong. These IPOs, the ones that have good fundamentals, should be well received. So that should be another thing that benefits the market sentiment this year.
All right, Young Yu Ma is the Chief Investment Officer at BMO Wealth Management. Young Yu, thank you.
Thank you, Kristen.